Hey, I wanted to give some insight. First of all, this is Jaken. I'm the owner of Jaken Finance Group. We do short-term, long-term debt. And today I just wanted to go over some DSCR examples to show you how expenses and um, leverage kind of impact the loan here. So this is a, without giving too much detail away, this is a client's numbers that I'm working on right now. And I'll tell you that his um, total value of his property is, that's the total value of his property. He's wanting I think we're actually at about 72 LTV, but whatever. That's the total value of his property approximately, right? I'm not trying to be exact here, but the point being is that this is our 5-1 ARM product, which is an interest-only fixed for 5 years, and then the 25 years it's an ARM. And the goal with this product, the reason we put people into this product is because of the interest rate market that we're currently in. We put them in there to cash flow while rates are high, with the hope that in the next 3 to 5 years they can refi out with no prepayment penalty after the 3-year point. So on day 1 of year 4. So I'm working out his numbers, and you can kind of see already that this is 2 properties in this, and those are his rent amounts. You can see in the cell spreadsheet up there. His DSCR isn't great, right? So he's not going to cash flow a ton. I do have a maintenance reserve calculated in here, so he's going to cash flow about $800 a month on 2 properties, which isn't like terrible. But if there's a water heater that needs to be replaced or something, he has 2 sets of problems, so it's not a great spot to be in. And one of the things I tell people to do is talk to me before you sign a lease, right? Because what we need to do is we really need to make sure that our lease numbers work with the current rates, the current leverage, whatever, right? So this is a key thing that I'm running into with a lot of refis that come to me who didn't use me on the flip. If you use me on the flip, I usually have the conversation about a month out from the rehab being done going, hey, let's look at market rent, see how aggressive we can be to get the rent as high as possible. Because you see those DSCRs 1.08, and again, that's with the maintenance reserve, but he could potentially be much higher, even a couple $100 added on each of these. That changes things dramatically, right? And that's just $200 a month. So you really need to have that conversation up front and make sure that your numbers make sense. And another thing too is his taxes are high. We can't really control that, but everything else considered, we need to make the rent as high as possible. So you need to talk to your refi lender before you lock those lease numbers in. So if you want to give us a call, you can. You can also submit your scenario at quotethisdeal.com. You can call me direct on my cell, 347-696-0192, or we have a receptionist that answers the phone 24/7. You can call at that number. So yeah, be sure to talk with your refi lender before you get that lease locked in. If you have any questions, you can text me at this number or call us at either number. Talk to you soon.